That's a lot of money right there. And you can see here, annual dividend would be 11,451. Hey, how's it going, YouTube? So today, let's talk about making over $1,000 a month with your dividend portfolio. Now, I've talked about it quite a bit here on the channel because I love the idea of hitting over $1,000. Now, we want to make more than $1,000 a month, but realistically, let's kind of go for that goal and let's talk about it. Now, my goal with my portfolio that we're going to be showing here today is to get to a point where in about 14 to 15 years, we're going to have some good money to be able to spend on things we want, whether it's our bills, whether it's vacations, anything else like that. But I figured let's go ahead and see, what it takes to get to $1,000 a month, maybe in about 9 years, because that's when I'll hit about 40 years old. So I want to kind of see if we can hit that goal sooner rather than later, or, how much more we're going to have to actually be putting in versus what we're doing today. I'm going to jump right over here. You're going to see my portfolio. And if this is your first, video with us, this is with M1 Finance. This is where we're housing our dividend focus. But I do know that in this account, we do have stocks that don't pay dividends. So that's a very important thing I need to disclose to people. Hope is that by 14, 15 years, we either one, have these companies start paying out dividends, or two, the companies have grown enough to the point where maybe I can sell them and buy into stocks that are paying dividends. So this is just my way of testing things out. If you want to follow along, subscribe so you guys can see the progress in which we're going. But let's go ahead and just talk about this. Let's kind of see this. Now, I am kind of like going back and forth. I want to make sure things are on screen because sometimes I might have my face covering it. So apologies on that end. But you can see here, currently our portfolio is sitting at $42,535. That's pretty awesome. This is actually the highest it's ever been. So we are pretty excited about that. If we actually jump back here to the time frames, let's go and see how the day ended up from this recording. We're down about $35. That is no worries whatsoever on that. If we go to the week, we're actually up about $500. These percentages here, by the way, in case you're not familiar with M1 Finance, this is money-weighted returns, and it's not like unrealized gains. There's some pros and cons to calculating this stuff. The percentages can feel a little off based off of what most people are used to, so just kind of keep that in mind. But I personally love looking at the money-weighted returns on gains, because then I can know that if I've sold or earned dividends, all that is calculated in there as well too. So you can see here in the last month, we're actually up almost $1,500, $36 of which has been dividends. If we go to the quarter, we're up almost $2,800, and over $100 of that has been dividends, which is fantastic. And if we go to the year marker, you can check this out. Look, we're up $6,400, and $377 of that has been dividends. Now, I have been reinvesting all these dividends that we've earned in this portfolio to the portfolio again, so that way all that money is being put back in, buying more. It's called the DRIP program. I say DRIP program, but it's called the DRIP, which stands for Dividend Reinvestment Program. So that money is going back in there and it's compounding, and it's making our journey towards hitting these goals happen even faster, and it's a really cool thing. If we go to our all-time, we're up almost $7,000, and we've earned pretty much $426 in dividends. This is fantastic. For anybody just getting started, I always like to point this out. January 23rd, 2019, I started this portfolio with $100. That's all it was. I got more comfortable. I got more understanding of what I was trying to aim for. And then I was able to put more and more over time. So if you need to get started, I'll have a link for M1 Finance, which is what I personally use on a regular basis for dividend investing, in the show notes down below. It does help support out the channel financially, but you get this free content just like this. And I believe they're still doing it with me. If you deposit $1,000 into that account, you will actually get a $30 bonus, which is nice. That money can go towards your financial future. It's almost like earning a dividend and then, getting more into your account. So check out those links down below. I'll also have tutorials if you are somebody who is a little afraid of getting started but wants an account that looks something like this. I'll have videos that will take you step by step on setting all of this stuff up as well too. So just something to keep in mind. Now, let's talk a little bit more about these dividends, because we want to have this goal. Now, you saw here in my 1 year marker, we earned $377 in dividends. Now, obviously, that is a far cry from the goal of having $1,000 to be able to pay all your bills. So how do we get to this goal? How do we achieve something more of being able to earn $1,000 a month. Now, depending on the dividends that you own, if you're not too familiar, a lot of the companies, if we go to like our activities here, I'm going to go to my dividends only here. You're going to see a lot of these companies pay out quarterly, so they don't pay out on a monthly basis. Now, there are companies that do pay out on a monthly basis. There are some pros and cons to going with those companies, and we've talked about them before here, and I'll continue to reiterate a lot of that stuff as well, where, maybe those companies that are paying on a regular basis and having a 4% yield, which is what a lot of people like to talk about in the dividend world, maybe they don't increase their dividends often enough to keep up with inflation. So that's something to really consider. But if you have enough companies that are paying you out sporadically enough to the point where it's as if you're getting paid on a monthly basis, that can also work too. So in this account right here, we own 21 different positions. Definitely debating on if we want to keep all these positions or not, but we'll look into that long term. Worst case, we take the profits that we earn from some of these and then invest them back into the ones that we want to keep for the even longer term. So let's kind of like plug in some numbers. Let's see what things will look like here for us. So again, if we go back here, we can see here we're at $42,535. I also have a couple different tabs here that we're going to be kind of running through. So I am on here on this website. So I have, this is Track Your Dividends. This is personally what I use with many other platforms for tracking dividends. And right now, you can see that we have a dividend yield if you invest into the same portfolio that I have at 1.18%, way lower than the 4% people go for. But the way I talk about it all the time here on the channel is I don't care about my dividends today. I want my dividends later. And two reasons for that. One, I don't want to pay taxes on it. And two, I forgot what the second reason was. Oh yeah, the fact that these companies that pay the 4 to 5% tend to not have high increases year over year. And so that could be a big factor in, how much my money is going to grow. Now, granted, I do know that earning 4% today means I have more money coming in from dividends and I can reinvest them. And if that's a strategy you're going for, like, rock on with that too. Like, I'm not saying that's a bad way to go about it by no stretch. This is just the path I want to take. If you're going that 4% route and reinvesting, let me know in the comments down below. I want to hear from you guys. Like, tell me what your plans are for getting to that $1,000. Are you doing all growth and then investing into dividends? Are you doing, 4% dividends and reinvesting? Or are you kind of doing a mix like what I'm doing right now, which is some growth, some dividends, but then dividend increases is where I'm really kind of focusing in that for that long term. Now, that set aside, our current yield on cost is actually 1.35%, which means the money I've put in over time and the dividend increases, my current yield is 1.35% versus if somebody put in this exact same amount of money today, the $42,536, they'd only be getting a yield of 1.18%. That's because they missed out on those dividend increases before they happened. So that's a factor in there as well too, because the price point of those stocks typically were a little bit lower at the time before the increases happened. Now, what we're going to do is go on to marketbeat.com. By the way, I'm not affiliated with MarketBeat. I just use this calculator. So although their ads are really annoying. So what we're going to do is plug in some information here. So we're putting in our portfolio. Our portfolio is at 42,535, right? Did I say that right? 535. Okay, yeah. Let me just click on some buttons here so that way this doesn't log us out. So that's our starting principal as of today. So our annual dividend, we saw it was 1.85%. Man, I have a 1.35. Apparently I have a really bad memory right now. So it is currently in a taxable account, which I also do want to disclose this. So when you're seeing my portfolio and you're seeing what I'm doing, keep in mind too that I actually do have a retirement account where I'm invested pretty much into the Vanguard S&P 500 fund. So this is definitely a little bit more of a risky play that I'm doing versus the safe stuff that I have with my actual retirement account. Just something to bear in mind. So yes, this is taxable. Annual contributions, we're gonna just start testing out with doing $1,000 a month here because unfortunately I can't choose to do like monthly because monthly will actually have a better impact on me because we're gonna be dollar cost averaging, but nonetheless, we'll do with what we can. So now this part right here, it says expected annual dividend increases. Am I on screen? Okay, perfect. I just wanted to make sure. Like I said, I have like two monitors here, so I want to make sure I'm on screen and you guys can see everything. So it says expected annual dividend increases per percentage per year. Now this is 1%, but 1% would be awful. Like you're not even keeping up with inflation at this point. Now, the companies that I have invested in, a lot of them increase their dividends pretty well every single year because they have the ability to do so with some of the growth they're having. So what we're going to do is we're going to play this a little safe, but a little bit more risky than some of the other companies. So let's go ahead and say that we're getting an 8% increase on our dividends annually. So that means the company is paying, $1, and then they increase it by 8%. So now you're going to get a little bit more. You're going to get $1.08 every year in dividends. If they're constantly increasing that way. Will all companies do that every year? Probably not. But nonetheless, we're going to keep going this route. Distribution frequency, we're going to just do quarterly for these examples. Dividend tax rate, we'll leave at 15%. And then expected annual share price appreciation, we're going to go ahead and put this also at 8. This is a little conservative in my opinion, but I just want to play it a little safer with these examples. The DRIP, we talked about this earlier. This is the dividend reinvestment program. So this will be taking our money and reinvesting it back in. And then we're not going to worry about that. And then years invested, because we talked about this, I just want to see what the numbers would be like if we can hit $1,000 a month by the age of 40 for myself. Obviously, depending on your age, these numbers might vary quite differently. If you're actually 10 years younger than me, you have way more advantage if you are getting started now versus if you are the same age as me and just getting started. But nonetheless, today is the day you want to get started. So if you have zero investing and you're the same age as me, is 31, get started today. Like, you're not going to get any younger, so put your money into the account and really get started. Again, link down below for you guys if you want to get started with M1 Finance. All right, so we're going to just put in 9 years. I just want to see all this stuff. So we're going to hit calculate dividends. We're going to have all these fun ads pop up. I don't know why this is taking longer than normal, but normally we'll have like the ads pop up and everything, so we're going to have to clear that off. This is fun, letting this load. There we go. Okay, there's one ad, and then there's usually a second ad that pops up. All right, so let's check this out. So if we put in $1,000 a month, going through this example here, so our ending balance, that's not bad. Almost a little over $250,000 into our account. Our average rate of return is about almost 8%. And then our annual dividend, you can see here, is $7,049. Now, obviously, we know that very quickly that is not going to be able to hit our goal right away. So that means we're going to have to change some of these numbers and figure out what works. By the way, I didn't do any of these numbers earlier. This is what I do for fun. So then I just was like, let me just hit record and figure this stuff out. So before we change up some of the numbers, just so we can see here, our total dividends paid out in the last 9 years would have been $22,694, which is pretty awesome. And then you can see here the yield on cost is 4.68%, which would be ideal at that point by the time we want to have this money to be able to get, an earnings back, which is around 4%, which is what a lot of people talk about. Real quick, I just want to show you the power of dividend investing with the DRIP program. So let's go ahead and say that we don't reinvest the dividends, just so you can see here this impact on here. So if we didn't reinvest any of those dividends, we'd only be at $234,000. Our annual dividends would only be $6,400, and then you could see here our total dividend payout was only $21,500. So pretty significant for not reinvesting the money that we earned in those dividends over that time. So dividend investing and reinvesting is really, really crucial. All right, so let's go ahead and change some of these numbers up. Let's go ahead and see what we can do here. So this is annual, right? So let's say we can do $1,800 a year, and let's go ahead and calculate this. So everything else is going to stay the same. So let's go ahead and go here, and let's scroll down here. So this right over here is still not going to be enough for us, but let's look at these numbers. $340,000 ending balance. You can see here our annual dividends would be $9,250. We're looking for annual dividend payout income of $12,000, obviously, because then break that down by 12 months, that'll equal out $1,000. And we're trying to do this in 9 years, right? Because that's when we hit 40. Can we do that? Can we make that happen? So let's go ahead and keep plugging in some of these numbers. So let's go ahead and say 24,000. So that right there obviously would be a pretty significant amount you'd have to be putting in every month, but that's with our current balance. So obviously if your balance is different, plug in those numbers differently and you guys can get an idea of what you can expect. So let's go ahead and plug this in here. And look, this is very close to what we need. So ending balance would be 420,000. That's a lot. That's a lot of money right there. And you can see here, annual dividend would be $11,451. So this is right at the cusp of being able to hit this goal. So let's change up the numbers just a tiny bit more and see what we would need. Maybe 26? Do you think 26 Ooh, that would be way too much. Actually, let's do 26. I did 25 real quick. So let's do 26,000 a year. And let's plug this in. Let's see. Oh, right there. Perfect. Okay. So ending balance would be 446,000. So getting very close to half a million, which is pretty insane, to be honest. Annual dividends, you can see here, would be $12,185. So that would be our focus to be able to hit this goal and be able to get there. Now, obviously, numbers can change. Expectations could be different. Companies can go out of business or lose, momentum and all this stuff. So there's so many variables. These are just, potential variables, right? So in order to hit this goal, to hit $1,000 a month in the next 9 years, so by the time we hit 40 years old, or at least I hit 40 years old, it would be $12,185 annually. So that means we would need to have our portfolio, which is where we're at now, $42,535, and we would need to be adding in at least $26,000 a year, which breaks down to exactly how much a month? Exactly $2,166, and average month is 4 weeks. So we would need to be putting in about $541 every week, give or take. Obviously, there's going to be a couple different times throughout the year that there's going to be a couple extra months or a couple extra weeks right here. So let's see here. So it's 52 weeks. Oops, I did that times. So 26,000 divided by 52 weeks. So we'd actually have to put in exactly, $500 every single week to be able to hit that goal. Is that something that's possible? Just really depends on your dedication towards it. $1,000 might not seem like the most in the world for some people, but to a lot of people, that's going to be able to take care of a lot of bills. Heck, that could even be your mortgage by that point, right? In the next 9 years. But, staying dedicated, this $1,000 a month is not even including the principal that you would have at that point. We talked about this. Your principal would be $446,000. Like, that is a lot of money right there to have, whether you need to pull some of that out to pay something off, or maybe you want to use that for the fun activities you want to have with like vacations and whatnot, or you're just like, screw that money. I don't need it right now. I'll live off of this $1,000 and just keep it for myself. But let's do one last thing really quick too. I want to show you. So that was 9 years, right? Well, what happens if we go to 15 years, right? So another 6 years on top of that. Look how powerful consistently investing in the market changes all of these numbers up. So everything else stays the same. We're investing $26,000 a year. All these numbers are staying there. Check this out. We'd have over $1 million in 15 years, which this is like our actual goal, right? Hitting the 15-year marker, over $1 million, and our annual dividend income would be $45,039. So what is that every single month, give or take? Right over here, $3,753, which is when we want to actually be using this money, right? So that $1,000 to hit it by year 9 would be ideal, just so that way we know that we're hitting our goals as quickly as possible. But then when we actually want this money, we'll be making $3,753 a month, give or take, and all that kind of stuff as well too, which can be really powerful stuff when you really think about it, right? When you're going through these numbers and you're like learning about them and reading about them and trying to figure out how can you get to a position where money is working for you instead of you working for it. It's all a matter of going through the idea of learning more, growing it, actually investing. That is the biggest thing, is actually investing into the market, which is why I showed you guys when I started my M1 Finance portfolio, I put in $100 to begin with, because that's all I really was comfortable doing until I felt more comfortable investing more and more. And now we're sitting at $43,000 in that account, which is mind-boggling to think that I'm managing that much money in my account, and that, a 0.5% change in a single day is a couple $100, which is really crazy to see. But you know what? Once we hit this goal of $1,000 in 9 years, and then in 15 years hit over $45,000 a year, like, it's gonna be sweet for having earned this money for doing almost nothing effectively, right? Like, we're putting this money in, and these companies are making the income, and we're just reaping all of those extra benefits. But getting started is the biggest thing. Constantly learning is also a big thing. So resources in the show notes down below for you to get started. And then I want you to click this video here so you can keep on learning and growing with your investing. My name is Dennis, and I'll see you in that next video.